Well, good morning, everyone. Welcome to our Monday morning trading room, start of another work week. Using air quotes when I say work week. Can I just get a sound check from everybody? I was kind of horsing around with the settings this morning, and I want to make sure that I didn't mess something up. Okay, great. For those of you who are new in the trading room this morning, welcome. A very quick overview of what you're looking at here. We've got the diversified trading system, and on this particular screen I'm following the NASDAQ. Here on the top left we have the Hawk Scalper, top right we have the Falcon Swing Trader, bottom left is the Eagle Trend Trader, and the bottom right is the Raptor. As I mentioned, these are the NASDAQ charts. I'm also following soybeans and crude oil on my other monitor. But please don't be shy. If there's a market you'd like to see or something you're interested in, or if you have questions, ask away. So let's take a look here what we've got going on this morning. We've had the market closed down here yesterday, or pardon me, Friday, around the 48.15 area, give or take. So we've got a little bit of an opening gap here, nothing too terribly serious. But it is customary for markets to try to fill those gaps when at all possible. So I think we may see the market slip a little lower. In fact, here we've got a macro pullback signal on the Hawk. Let's see if I can get into that one still. Okay, now I just threw a onesie on there, and what I'm going to do is I'm going to try to run this one out rather than take the profit on target, and sometimes that turns around to bite me, but we'll see whether or not we actually get into that gap and get down here to around that 48.15 area. That would be a very, very nice way to start the day. And of course, we're only a minute or two into the session, so this is rather risky still, right? The market doesn't have any real bearings just yet. So that's why I only went in with a single contract. I don't want to get too carried away here. All right, come on. This may well turn into a 4-arrow consolidation as well. Remember, on your Hawk, your best macro pullbacks are always going to have this type of shape to it, where it has like in this case, a bear flag. This is the second macro pullback within a relatively short trend. Now we have our 4-arrow consolidation. So we should expect the market to make a move lower now, and if we can get a couple bars moving in our favor here, I'll start to roll our stops up a little bit. Come on. All right, let's put that on the shelf there for the moment. Oh yes, here's the problem. We're into the hard edge on the Eagle. Remember, whenever we encounter the hard edge on the Eagle, we do expect some sort of reaction. It doesn't mean that the market's always going to bounce off of there. However, we can usually anticipate the market reacting in one way or another. Let's take a look here on the Falcon as well. Okay, so our median line on our support and resistance suite is down here at that 48, 15, 16 area. So it's still a plausible target for us. And now we're into yellow bars. And now we're into a green bar sell. So once the sellers recommit to this trend, that will be our cue to start rolling stops in. Come on. All right, so they're confirming the resistance here on the highs there. And the resistance is here, here. Oh, come on. Don't be doing that. All right, so we've got a couple bars trading lower now, and now we're actually in the process of making a first micro macro cross higher. We don't have the complete signal just yet, but we are getting close. Well, that's not where I want my stop. Okay, I'm going to manually bring my stop in right above here. So we've got a market that's a little conflicted this morning. Not quite sure whether they want to go higher or lower just yet. Or maybe it's going to be another one of these sideways kinds of days. Wow, they're really stuck here at the moment. Let's see, does this actually coincide with the trend line? Oh, not quite, but close. We'll see whether or not we get some selling coming in from there. Getting a few conflicting signals now. You see the Falcon trying to produce a buy signal. Just have the warning dot, don't have the single signal just yet. We do have a red bar buy signal here on the Eagle. All right, back to the action here on the Hawk. Kind of be looking at it like this, I think. So we've seen the buyers try to rally it up a little bit. We'll see if the sellers show up. They had better. It's going to put a little bit of pressure on my trade. to see them. There we go. Come on down. What I'm looking for now is a challenge here below the lows. There we go. All right, so that's a good enough excuse to start getting a little bit more aggressive with our stops. Maybe I'll go with the parabolics. There we go. So the idea is if they fail here now and turn the market higher, once again, they're very likely going to run the stops up here. If you wanted, you could leave your stops just above this high if you didn't want to press the trade too quickly. Come on. So we've got a red bar buy. If this fails now below the low, we should be in good shape to see the market try to tail off and get into that opening gap. Come on, just take out that low. There we go. All right, so we're making a little progress now. We should get a chance here to see the market challenge the lows. Stephen, yeah, Stephen writes, it might be a trade setup, but for me it's not very good as the market has not decided the trend yet, so I pass on these types of trades. You know, very often, and I've mentioned this before, very often when I'm trading, I don't even come into the office for the first half hour, just to give the market that chance to set up a trend, and it usually takes 15, 20, 30 minutes for the market to sort itself out. This is relatively quiet for a Monday morning. I was hoping that given that it's Monday, the market might pick its direction early. We may see a more pronounced move. Yeah, like Steven says, for about the last month, the Nasdaq's been jumping right out of the open. That's true. All right, I'm going to go into the parabolic mode now. If it stops me out here, it stops me out. What we're doing now is we're challenging these lows right down here. You see that? So this is where we're at. So if we get a bounce, well, then the buyers may be digging in. We may be getting a sideways trading range. And if the sellers can push it through, I think we're going to see them fill that gap. Maybe get down to that 48.15 area that we've been watching for. Come on. Come on. No, they're going to tap me here in a second, but I think we'll just take it, leave it at that. All right, well, I guess we're in wait mode. We are getting a first micro-macro cross lower now. Another hard edge bounce here on the Raptor. We may actually get a double pullback signal here on the Raptor. So there's the first pullback. Market comes down, bounces. There's pullback number one with the signal. Here's pullback number two now. And we'll see whether it bounces out and produces another signal. That would be a double pullback signal. This is actually now a soft edge sell. I think we also had a, yeah, we're getting a couple trend change signals here. Let's maybe try one on the Falcon. So we're going to produce a signal right down here. We've got the warning dot. We're going to produce a signal. For another couple ticks, I can take it below the low, which might be a little bit safer. All right, so that signal opportunity has since been voided by these green dots. So we'll put that back on the shelf. Very sideways market at the moment. Best thing to do in a sideways market is, well, just to avoid it really until it gets out of the sideways range. Okay, so there's the double pullback signal. I'm going to hop in on this one and we're going to give it a try now to the upside. My objective here is to keep my stops deep enough that I don't get tagged on a tiny little retest here. Come on. Come on, get up there. Let's take a look. Russell says it looks as though the eagle might be setting up for a rule of three. Quite possibly. We haven't started producing any counter-trend signals, though. Remember, the rule of three is a counter-trend signal. This is your red bar buy signal, which occurs off of the hard edge. A rule of three, let's see if I can find you one. Remember, because the rule of three is counter-trend, you have to have a trend first. So here's a trend. And now we start producing counter-trend signals. There's one, there's two, there's three. There's your rule of three. The important thing to remember with the rule of three is that it must always, always, always be preceded by a retest of the high. Now sometimes you can actually make a case that this was the retest back here, and I wouldn't argue with you. Sometimes the retest is more pronounced, sometimes it's fairly shallow, as it is in this instance here, but at any rate, there must be a retest. Without that retest, you don't have a rule of three. Once you get that retest and you see the market continually producing counter-trend signals, then you're looking for a move in the opposite direction. Oh, that wasn't a very pronounced move, was it? Come on, took a whole lot of heat, and then it just went sideways. So there was actually a rule of three signal that didn't have very much follow-through. But those are the requirements for a rule of three. First, you have to have a trend. Then you have to have a retest and a failure, and you have to have the market producing counter-trend signals. Oops, wrong button. So what we have going on right now, we've got three signals, but they're all with trend. Let's see, do I need to do anything with my Raptor trade? No, not yet. We're still very, very sideways. Elmer's asking, Eric, how do you change the tick target to pips instead of ticks if you're trading Forex? Yeah, that's right, because you may want like 100 pip target, right? Or, oh no, you can get it in there. You can get 100. Normally, I just highlight it. I just highlight and type in the value that I want. If you want to set it as a preset, like a default, you go here to your strategies window. You highlight your trade manager. Now you have to remember, before you can make any changes to your trade manager, you need to turn it off. So you go here to your enable tab and you turn that off. Now you can preset your targets. So if you want an auto target, you go to your tick value. Otherwise, if you want to set your targets manually, you go to click. You're also going to want to adjust your quantity round down value. This is going to be more important when you're doing something like Forex. You're not necessarily going to want it to round down to the nearest 1. You may want it to round down to the nearest 10, or maybe even the nearest 100, depending how much size you're trading. This divide by quantity divisor value, this is also going to be relevant for you as a Forex trader. But as you can see from the little instructions down here, this is broker dependent and leverage dependent, so it may or may not work for your broker. In most cases, the default value of 1 is what you want anyhow. Now you get to your targets. So target 1, I'm normally all in, all out, but you can preset as many as 3 targets, and this is where you would preset your profit objective as well. Once everything is to your liking, it's a good idea to save it as a template. So you go here to save, and you just type in a name, my Forex or whatever. Hit enter, and then you will have saved it as one of your setups. So next time you load a chart or your trade manager, it's very easy to put it on there. You don't have to go through this process every single time. When everything is the way you like it, go here to enabled, turn that back on, click apply, and there you go. You'll have your trade manager with all your presets. All right, so we did hit our break-even trigger. I don't have the stops enabled yet, so we didn't actually hit, or the trade manager actually hasn't rolled the break-even up. But I think I'm going to do this. There we go. All right, so there we go. We've hit our first profit target. Our stops are at break-even. I've enabled the parabolics, and we'll see whether or not we can't get the market to run out a little bit to the upside now. Come on. See, now we're back here to the overnight highs. See that spike of buying that went through the trade manager? Oh, they're still chewing through the orders here. We might get another little uptick. There was this whole big spike of buying that went through. That's kind of what helped spur it on here, but that's not as much follow through as you would expect to see from such lopsided trading. There we go. Come on. Good morning, Jim. Sorry, I didn't see. Jim posted some advanced decline numbers for us here. So he says the Russell's very strong, and we've got nearly 2,400 on the buy and only 400 on the sell. So that's a very bullish-looking market, even with an opening gap. Okay, that's interesting. Russell says my Eagle chart. My Eagle chart shows two sell signals below the hard edge, which is why he was thinking that there was a rule of three building. And yes, you would be correct at that. All right, well, let's take a look here. The thing is, with the data, sometimes depending on your data provider, sometimes depending on your settings, when your chart actually starts to build, it may make some slight differences between the charts. Now, normally they're not significant. You didn't go as far as actually produce a rule of three signal. But here are my settings. So I've got 50 days loaded, and the reason I have 50 days loaded is because I'm running the trade forecaster. That shouldn't matter so much, but what might make a difference is the session template I have set at default 24/5. If you're running a 24/7 template, that might make a slight difference. So you may want to check that. And then you can always refresh, and I'm going to refresh mine here as well. So reload NinjaScript down here. So you right click on your chart. You can also hit your F5 button on your keyboard. And it's going to say it's going to stop the trade manager and restart it. And yes, that's okay. Go ahead. So see if that helps. I'm running continuum data. Sometimes, there can be a slight difference between the data providers. Good. Russell says the 24/5 setting fixed it. Russell asks, do you recommend 24/5 on all your charts? Yes, I do. I don't really, well, I know why they offer the 24/7 because there are actually some people who like to trade the Globex in the wee hours Sunday morning. It's like open for a few hours, but there's that option for you if you want it. But yes, 24/5 is really the only settings that are going to matter. All right, so we're kind of stalling out here a little bit at the highs, 48.40. Are we near the top of the hour? Yes, of course we are. Okay, well, not bad. Not bad for a sideways kind of morning. We did get a first micro macro cross back here as well, you probably noticed. And of course, we were eyeing these red bar buy signals on the Eagle. I don't think those have gotten to their profit objective just yet. Oh, very, very close. There's certainly enough in this trade that you could either get out with profit or at the very least run a break-even stop. I'm not sure I would leave my stop all the way down here, given that the market does seem to have a bit of a sideways bias today. Well, we're just waiting, watching and waiting. Crude oil also kind of sideways, as is the soybean market, so that kind of seems to be the theme today. Not a whole lot going on. We got a macro pullback signal here right in the middle of this sideways trend. See how we're just moving sideways? If you're going to try it, don't go in heavy on this. This is a hit and run style trade. Remember, in trading ranges, here's the issue with trading ranges. So we've identified the markets in a sideways range, right? The best course of action when you suspect the market is moving sideways is let it break out, allow it to retest, and then look for that signal. All right, that's what's going to keep you out of trouble. And of course, the same thing happens on the downside. The problem with trading ranges, besides the market going sideways, of course, is that this is the area that traders are going to sell. This is the area traders are going to buy. Anything in the middle here is really up for grabs. It could go higher, it could go lower. So do we really want to be buying in the top third or top quarter where the sellers are going to be a little bit more aggressive? No, probably not. Now, if I had a red bar buy signal down here, that would be a little bit more inviting. This is why I've got to run my stops so deep in case the market tries to bring me in and then challenge the bottom end of the trading range. It's like trading in slow motion today. Tony says shortly after the open there was a nice late filter entry on the mid cap. That's the EMD. I don't think we had a comparable signal here on the NASDAQ. No, we didn't. No, the NASDAQ waffling a little bit more. Nice little bounce here off the primary resistance line. All right, this signal has since gone into yellow bars, so we can close that. Remove all temptation. are getting that red bar buy signal that I was talking about, but I don't feel so good about it. Well, because we're sideways, right? The market's drifting sideways. Maybe it won't tempt me with an actual red bar buy. And of course, we can always short a red bar buy. All right. Well, there it is. There's the red bar buy signal. Now, the red bar buy signal here on the hawk, I know I said sideways range. I do expect it to rally here a little bit, truth be told, because we need to see a retest of the high. So you could buy the red bar buy this way. You could also set up to short a failure of it, where you enter below there. Problem is, where in the world am I going to cover this trade? Do I have to cover it way up there? I guess so. There's not much structure elsewhere. Boy, oh boy, everything really is. Okay, so here comes that rally. Remember, we were anticipating the retest of the high. I'm looking to short it, though. I feel a little bit more comfortable trying to sell it. Yeah, we're back here to the hard edge. No real surprise there. So what I'm waiting for is perhaps a failure here, or maybe a rule of three developing, or possible trend change. Possible trend change developing here on the Falcon, and while this isn't much of a retest, I would consider another signal here a soft edge sell on the Raptor. Although everything's moving so slowly, I may just stick with the one hawk signal, not get too crazy. Oh, now we're coming back with a green bar sell. My goodness, what a conflicted market. Crude oil just made a huge run up. While I was looking around, if you were watching crude oil, we got a nice little trend change signal here off the North American Open, followed by a trend line touch. This is, of course, on the Falcon. And just a very quick rally there from crude oil. I don't know, is there a report due out today, or what's bogging everything down? Maybe it's the lack of news. Well, it's a good time for questions if you... My goodness, things are really, really slow here this morning. All right, there we go. Oh, they're going to try to run this out. It looks like we've got a little bit of momentum on our side. That was a fairly quick little move. Let's see if we can get back down to these lows or if the market's going to flinch one more time. There we go. Come on. Come on. All right, I'm going to take this break even now. Oops, let's enable our stops. Just because of this trend line. No, not getting the follow through. Oh, look at this. Now we come back with yet another first micro macro cross, but this darn market is so congested. Now I know, I always say first micro macro cross, high probability signal. I take it almost without exception. Problem is, I'm risking it way up here. Now there's the signal there. I'm going to offer up a couple of ticks and take it below the low. And hopefully that doesn't come back to bite me. This is the thing too with the red bar buy signal. So you saw how we set up to short the failure of that. And you know what? I'm going to take a chance. I'm only running a single here. I'm going to take a chance and see if we can't run this one out. What I was going to say about the red bar buy signal, because it's a counter trend signal or potentially a counter trend signal, you don't have to take it right on the signal. You can use it simply as an early warning that perhaps a first micro macro cross signal will print. these lows. Pardon me. Come on, let's go. Don't make me bring out the magic mouse. Darn it. Well, a break even is not a losing trade, but I was really hoping we would see a little bit of follow through on that. All right, so they're testing the bottom end of the trading range. We may get a bounce here and a buy. The Raptor working on a possible soft edge sell signal of all things, or pardon me, soft edge sell. Cloud crossover. I'm getting my signals confused. All right, the hawk may be working itself into a macro pullback situation. Other than that, we're just still kind of sideways. Ken, I got your message there. I'm going to pass that along to Adam, and he'll be the one that will look after you or give you particulars on how you can proceed about getting the charts onto your new computer. Good question here from Stephen. Stephen asks, question, Eric. Have you ever traded the Forex, and are they like trading the NASDAQ? I've only ever dabbled in the Forex. I've never really looked at it seriously. I've pretty much been a futures trader my whole career. Uh, I still believe futures to be the purest of the markets. I'll tell you the thing I dislike about the Forex is, everybody says, oh, trade Forex, you don't pay commissions. Well, you do, and they nail you in the spread. Now, if you're trading a rather large account, your broker will normally give you a better spread than if you're trading a small account. So in other words, and the spreads are usually much more expensive than an outright commission. Futures commissions are so insanely low now. You can easily trade round turn for, well, certainly less than $10, in some cases even less than 5 or 6, again, depending on your volume. But in Forex, it's not unusual to pay $20, $30, $40 on a spread. So the first $40 you own or earn goes to the broker. And to me, that's just insanity. Why you would pay $40 to trade. Now, Forex does have a big advantage over futures in that you're really able to control your position size. This is why Forex is such a popular market with small account traders, because you can quite literally take a Forex trade. Let's say you wanted to take this signal here. You could quite literally short there, cover up here, and put the whole trade on for $10 if you wanted. Now, mind you, you may only earn 50 cents on the profit target, and it's hardly worth your while. Obviously, if you're paying $40 in commissions, or even $20 in commissions, you need to have a much more aggressive profit objective. But the fact is, with Forex, you can control your position size down to the nth degree, so you can risk as little as you want, or as you may be able to afford, whatever the case may be. Futures contracts are preset in size. Therefore, the amount is going to be preset, right? It's going to be $280 per contract up here, say $300 per contract, and there's no way around it. If I want to take this trade, that's what it's going to cost me to trade. Now, a good alternative, I think, between the futures and the Forex, if you're a smaller account trader and you can't quite afford the futures, and that's a lot of times why I focus on the minis like the NASDAQ, the YM, because it does give you a lot of options for the smaller trader. But let's say even the NQ is out of your league, given your account size, you may want to consider the ETFs. GLD follows the gold market. SPY is the spider that follows the S&P. The Qs follows the NASDAQ. And these are all ETF derivatives. Now, the nice thing about the ETFs is they've got reasonable commissions. You're paying a little bit more than you would in futures, but it's not exorbitant. You're probably paying anywhere from $10 to $20 a trade. Most ETFs will let you trade for around $7 to $10, which is not overwhelming. And you still have that customization aspect. So let's say you're trading the spider, that's the SPY, which follows the E-mini S&P. You can trade 100 spider shares, right? And maybe put on a trade for less than $100. And if you want to, trade more, well, that option is there as well. If you want to, say, take a trade where you can risk $200, well, then maybe you'll trade 200 spider shares or 300 spider shares, depending on how you set up your trade. So I much prefer the ETFs to the Forex market. And I know the Forex is huge, it's insanely popular, but I think people gravitate to it and they don't realize they gravitate to it because it seems inexpensive, and yet they don't realize that they're getting stung on the back end. They're getting cleaned out by their brokerage, which is not new. Brokers have always, well, I don't want to say take advantage, but I remember paying $100 round turn for my trade per contract, $50 a side, and I thought I was getting a good deal. That shows you how long I've been in the game. Yeah, I think it's worth your while, to spend a little time considering your market mix, considering, what trades you're going to look at, whether it be Forex or futures or ETFs, because that will have an impact on your earnings, no question about it. All right, so looks like that first micro macro cross did have some follow through. I was a little quick with my stop, taking the break even stop out. Could have stayed with it a little longer. Finally got down to this, well, I don't know if we're going to see 48.15, but we're close enough that I think a lot of traders are going to consider that opening gap filled. The cloud crossover signal here on the Raptor. We may get another follow-up cloud crossover signal. This, you see, was kind of an early cloud crossover. On the Raptor, when your clouds cross, we're going to get a pullback into the cloud. Right? So here the cloud started to cross. The market pulls back into the cloud. We expect the cloud to offer resistance. And in this case, push the market back out. There's our signal. Now that the clouds have actually crossed, we may see that repeat. Let me show you. So here's, this cloud crossover is nearly textbook. See, we had an early one here. And then we had the bigger one here. This is more the proper cloud crossover. Where the clouds cross, the market retreats into the cloud, comes out of the cloud, produces a buy signal. That's one of our high probability signals. And you can see that had some fairly decent follow through with it. Now we're getting the same thing but in reverse. So don't be surprised if we see the market trade up here a little and then perhaps a turn and reverse again. Oh, we're getting quite the rainstorm here in the Pacific Northwest. A little bit early for the rain, but darn weatherman if he wasn't right. All right, well, we're just kind of in holding pattern again. Well, here comes that cloud crossover trying. Finally made it down here to the median line. My goodness, that took all morning to do. Okay, let's put that away. Well, it looks as though the market is trying to get into a downtrend, but we haven't really had any decent follow-up signals. Well, it's a dead slow grind today. We may button up the room a little bit early. I don't think we're missing out on a whole lot. Waiting for a proper trend change signal in the Eagle here. Waiting for the cloud crossover on the Raptor. I do believe they're going to owe us one more rally. All right, well, if anybody has any questions, that would be a good time to ask. Otherwise, I think we're going to button up the room here a little bit early this morning, and we'll do it all over again tomorrow. Not a bad morning per se, just terribly slow. We did at least get a decent move lower, caught a couple of trades and got stopped out on a couple, so Could be a whole lot worse. If you are going to continue trading today for the rest of the morning, I do expect a little bit of an uptick here. Although overall, it looks like the NASDAQ in a little bit of a downward slide. So don't get too crazy to the upside. All right, guys and girls, we'll see you again tomorrow morning. We'll talk to you then. Bye for now.